this is Subalakshmi, Assistant Professor of Commerce CA from SFR College, Sivakasi. So, in this video we can see about the e-filing of income tax returns. So, this is a more common and interesting topic. So, we have to file the income tax returns through the online. So, in this videos we can see about the overview about the income tax returns. So, as already we know that what is tax, what is the reason for levy of the tax, assessee, who is assessee. So, we can see one by one. So, first we have to just a small intro about the tax. So, tax is a common form of levied by the government to meet the common welfare expenditure of the society. So, we know that there are two types of taxes. First one is a direct tax and the second one is an indirect tax. Direct tax means it is directly levied on the income of a person. Indirect tax means indirectly levied on the goods or service, for example GST tax. So, the reason for levy of the tax is the basic source of revenue to the government. So, it is one of the basic source for the government. So, this revenue is raised to utilize the meeting the some common expenses like defense, education, health care, infrastructure facilities like roads, dams, etc. So, the next one is the assessee. So, assessee means a person who any tax or any other sum of money is payable under this act. So, the assessee may be a firm, company, HUF, individual or local authority or AOP or even BOI. So, in the next income as per the Income Tax Act, it includes any other income like a house property income, capital gain income and any other sources. So, next assessment year means the current year. So, it always starts from 1st April to the 31st March. It is a period of 12 months and the previous year means the financial year immediately preceding the assessment year. So, introduction. So, every citizen of India has to pay tax on their own income to the government of India as per the income tax rules and regulations. So, income for each financial year is taxed by income tax law, even if you are an individual, you are an association, you are a firm or an LLP or a local authority or even though you are a HUF. Hence, filing your income return annually is essential and mandatory too. So, it means income tax return is a form used to show your gross taxable income, not a income. It is a gross taxable income for the given fiscal year. So, this form is used by the taxpayers to formally declare his incomes, deductions claimed, any exemptions or even the taxes paid by him. So, therefore, it calculates your net income tax liability. So, the incomes on which you pay tax. So, these are the 5 heads of incomes. So, from the head salaries we have to salary, allowances, gratuities, so any other payments. So, house property we have to put your house on a rental. So, here are the some of the examples of the sources of incomes of your 5 heads of income. So, the current budget what says? So, budget 2025 updates. So, the new income tax bill has been tabled by the Honorable Finance Minister in the Lok Sabha. So, as per the budget 2025, the income up to 12 lakhs will have a zero tax liability for the financial year 25 and 26. So, as per the assessment year 26 and 27 under the new tax regime. So, here is the now. So, annual income tax slabs. So, up to 4 lakhs we have no tax, the income tax becomes nil. So, 4 lakhs to 8 lakhs we have a 5%. So, 8 lakhs to 12 lakhs we have to 10%, 12 to 16 15%, 16 to 20 20 percentage, 20 to 24, 25 percentage. So above 24 lakhs we have a tax slab rates of 30 percentage. So the new tax liability, so the new tax regime for the individual HUF so becomes a dramatic change in the current budget. So in the budget 2025, so again I repeat, the up to the income of 12 lakhs we have a zero tax liability. So deductions. So first we have to calculate the tax liability. So total income, gross incomes, there are the amounts income tax department allowed to you to reduce your income. So deductions means just we have to reduce your income as per the income tax rules. So bringing down your tax liability. So this is the common form of deduction. Sum of all heads of income you have to give a gross income. So from the gross income you have to deduct the deductions given by the income tax department. So it gives a taxable income. So income tax return. So these are the 7 various income tax returns, ITR 1, 2, 3, 4, 5, 6 and 7. So every taxpayer should file ITR on or before the specified due dates, that is 31st July of the assessment year. So the applicability of the ITR forms varies depending on the sources of incomes. So based on the category it may be changed like individuals or HUF or company. So the applicability may be changes as per the naturality. So here are the some of the documents. So if you are a salaried individual, the form 16 and 16A, 26 AS, rent receipts paid by the HRA, pay slips, these are the required. So in the form of capital gains, the ELLS statement, mutual fund statement, sales and purchase debt funds. So in the form of house property, PAN card details, co-owner details, property address and home loan interest certificates. In the form of other sources, bank FD, details of interest received from the tax saving corporate bonds. So the user, here the assessee can file the income tax return in the either two modes, that is offline mode or online mode. So in the offline mode we have to download the applicable ITR, that is 1 to 7, fill the form, save the generated JSON file and then upload it. So in the form of online, so we have to directly go to the e-filing portal and submit it. So here are the e-filing steps. So according to the section 139 subsection 1 of India, so any individual whose total income in the last year exceeds the tax exemption, that is the tax slab rates. So e-filing is a process through which an individual file their income through online. So required documents as already said, bank details, PAN, so rent receipt, house properties, capital gains and reporting incomes. So here are the some of the steps of filing returns. So first we have to calculate the income and tax. So the first steps while e-filing income tax is to calculate your income and applicable tax with respect to their tax provisions. These provisions are given by the income tax department. So the income calculation should be done by considering income from every source, all the 5 heads of income, that is the salary, business or profession, capital gains and other sources. So and computed after claiming their valid deductions. So in the step 2, so we have to obtain TDS certificates and form 26 AS. So it is a crucial steps to summarize the TDS amount from the TDS certificates. So form 26 AS can be used to compute the summary of TDS and tax paid, so during the financial year. So the third step is select the suitable income tax return. So a taxpayer is required to select the exact ITR form before filing their returns. So you can file income tax returns either online or offline. For online ITR filing, only 2 forms, that is ITR 1 and ITR 4 are available. So rest of all the income tax forms will be required to be uploaded on offline by generating XML file. So the next fourth step is download ITR utility from the income tax portal. So here is the income tax portal. We have to log in with your login ID and password. So select the particular ITR forms, that is 1 or 4, and fill the forms, or after that we have to download it. So the step 5. So fill out the downloaded form. Once you download the offline utility, ensure to fill out the required details that would include your income tax payable and refund receivable, etc. So step 6, validate the information entered. So after filling out the form, so click on the validate button finally to confirm all the filled in details. So 7th step, convert the file to XML format. So post validations, click on generate XML option of the file to convert the file into the XML format. So the last step, upload the XML file. So we have to upload the XML file on the official income tax filing portal. So conclusions. So an income tax return is like a financial report you should submit to the government each year. It shows how much money you can earn and how much tax you owe based on that income. So think of it as a way of the government to keep track of everyone's earnings and ensures everyone pays for their fair share to fund public services. So support to the Indian government. Make sure you have to pay the tax every year. So from this video we conclude that income tax is a crucial one. So from the government we have to spend more and more for our infrastructures. So for that the government need taxes. So we have to pay the tax every year without skipping it. So hope you like this video. Thank you.